Good day, everyone. In today's class, we are going to examine the methods of calculating growth rate. In my previous video, I was able to explain the dividend with growth with the formula. And in every question, growth rate will not be given. Yes, growth rate will not be given. So you ask to determine the growth rate. Now, the question is, how do you determine the growth rate? Let's say in real life situation, you have 2012, for instance, 2011. So what is the growth rate? The dividend in dividend from 2011 to 2022, or from 2011 to 2012, right? So that is that in practical. But for the purpose of this class, the growth rate will not be given. Right? So how do we determine the methods of calculating growth rate? There are two methods. One, the extrapolation. Now, extrapolation or geometric what? Mean or historical growth. Which of the names, right? Extrapolation. Now, how do we determine the growth rate? Now, growth rate will be equals to, right, n minus 1. N is the numbers of years, right? Minus 1. The square root of current dividend divided by earliest what? Dividend minus what? 1. Now, let me give an instance here. Let's say we have 2023, right? And this is 2022, right? This is 2021, right? Now, this is 20 kobo, right? Why this is, let's say this is 5 kobo, right? Why this is why this is 2 kobo, right? Now we can see that the the current dividend here is 2023, right? Why the earliest dividend is what? 2021. So the current dividend of 20k, 20 kobo divided by 2021, which is what? 2 kobo. Remember that this n minus 1, I said when we get to cost of equity or cost of equity, we are going to dissect this. So do you know the reason why there is always n minus 1? Why? It is because in 2023, there is no growth because we don't have 2024. So that is why, how many numbers of years do we have here? That is 3. So that is why we have what? 3 minus what? 1. 3 minus 1. That is 2 years because there is no growth yet in 2023. If at the end we have 2024, we would have said, okay, there is a growth from 2023 to what? 2024. So that is why it is always n minus what? N minus 1. So that is one method of calculating growth rate. Now, in every question, you look forward to dividend. These are the dividend, right? These are the dividend, right? These are the dividend. You look forward to all dividend. Check if there is a series of dividend, right? When you want to determine dividend with growth, to determine the cost of equity using the dividend with growth, this is the formula that you're going to use. I've explained in my previous video, right? How to determine the growth rate. You use either extrapolation or Gordon's model. We'll get to Gordon's model, right? Now, this extrapolation now, when you are given a series of dividends, for instance, like this, so it means that you are going to use extrapolation or geometric mean, right? Or equivalent annual growth rate. So it can be any name, right? So this is the method you use to determine the what? The growth rate, right? When you are given a series of dividend, please take note of this. When you are given a what? A series of what? The dividend. So another method we look at is Gordon's, right? Gordon's Gordon's growth model, right? Gordon's growth, right? Growth model, right? Now, this Gordon's growth model, right? How to determine the growth rate? Growth rate is equals to R times B, right? What is our R? R equals to return on investment, right? Return on investment slash return on equity, right? So it could be return on investment, right? Slash return on equity. Do you know that the cost of equity that you calculated, it is a cost to the firm, right? Is it a return to the what? To the shareholders, right? So what they are expecting from their what? From their investment, return on what? Equity, right? For instance, now when I invest in either Jitco or Fidelity, I'll be expecting something from my investment, right? That is return on investment slash return on what? Equity, right? So now how do we determine the return on investment? That is the question. How do we determine the return on what? Investment. We already know how to do that. So let me bring it out. Return on investment, right? Return on investment is equals to profit after tax, right? Minus preference shares, if it is given in the question, divided by capital employed. Capital employed. Don't forget that capital employed could be defined as employed, could be defined as net assets, right? Net assets, right? Current assets minus your current liability, that is net asset. It could be defined as total assets, right? Total assets, right? Could be defined as total equity, right? That is capital employed. So it depends on your equity. It depends on what is given in the question, right? Or it depends on the examiner point of view. So the examiner could say that the capital employed is defined as the net asset or total what? Equity. It depends on what the examiner point of view. So what is B? B is equals to retention. Retention ratio, right? Retention ratio. Now, retention ratio means that, when you pay dividend, right, what you will have left is your retention, right? Is your retained earning. It could be a retained earning, right? It's not, yes, it could be retained what? Retained earnings, because what you have left after paying your dividend is a retention, right? How do we determine the what? The ratio, right? How do we determine the what? The ratio, right? Right? So retention ratio will be calculated based on retention, profit after tax, right? Minus the dividend, dividend divided by profit after tax. This will give us what? The retention ratio. Profit after tax minus the dividend will give us what? Retained earning divided by profit after tax will give us what? The retention ratio. What it means is that when you pay your equity holder, right? What did you have? That is retention, right? So in my next video, I will explain the convertible what? Debt. So see you next in my next video. So please like, subscribe, and share with your friends. Bye.